Bear markets don't start with panic. They start with confusion. They start with ranges that go nowhere, with rallies that feel weak, with traders arguing about whether this is just a dip or something more serious. And by the time everyone agrees it's a bear market, most of the damage is already done. So the real question isn't, will a bear market happen? The real question is, has it already begun? In today's video, I want to step away from emotion and look at Bitcoin structurally, not through hope, not through fear, but through behavior. What would a real Bitcoin bear market actually look like? What signs would appear first? And just as importantly, what would invalidate that idea? This is Memes to Markets. Let's get into it. Most people define a bear market by price. Down 20%, down 30%. New lows. But markets are not defined by percentages. They're defined by structure and behavior. A bear market is not just price falling. It's a shift in how the market responds. In a bull phase, dips get bought. Breakouts follow through. Bad news gets ignored in a bear phase. Rallies get sold. Breakouts fail. Good news has no impact. The question isn't how far Bitcoin has dropped. The question is whether its behavior has changed. There are uncomfortable signs we have to acknowledge. First, momentum has clearly slowed. Bitcoin is no longer trending. It's ranging. Second, rallies are struggling to expand. Each attempt higher meets selling pressure faster. Third, liquidity feels thinner. Moves are more erratic, less confident. These are early characteristics of distribution. And if we look at previous cycles, bear markets rarely begin with a crash. They begin with exhaustion. Price stops making progress. Sentiment stays optimistic for a while. Then slowly, confidence fades. That transition is where we might be right now. Here's the important part. Nothing about this moment is confirmed. A range can be distribution before a deeper fall or absorption before another leg up. Both look identical in real time. If Bitcoin can reclaim key levels, hold them as support, and expand, then this entire phase becomes a reset, not a bear market. Bear markets are only confirmed when range lows fail, rallies cannot reclaim structure, lower highs start forming on higher time frames. Until that happens, we are in probability, not certainty. Regardless of labels, the environment has already changed for altcoins and meme coins. When Bitcoin stops trending, altcoins usually lose momentum, bleed slowly, become narrative-driven instead of structure-driven. Meme coins suffer even more because they depend on attention, liquidity, risk appetite. If this is the early stage of a bear market, the game becomes survival, not growth. If it's just a reset, then this boredom phase is where the next opportunity quietly forms. Either way, aggression is punished here. You don't need to predict whether this is officially a bear market. You need to respect what the market is doing. That means smaller size, more patience, clearer invalidation. If the market proves strength, adapt. If it proves weakness, protect capital. Bear markets don't destroy traders. Impatience during transitions does. So has the Bitcoin bear market already begun? Maybe. But the smarter question is, what would prove it? Markets reveal themselves through behavior, not opinions. Right now, Bitcoin is testing conviction, not direction. And your job isn't to call the future, it's to survive the present. If this helped you think more clearly about where we are in the cycle, like the video, and subscribe for more calm, cycle-aware crypto insights. This is Memes to Markets, and I'll see you in the next one.